Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got one of our sponsors on for today, and we're going to be talking about Alta Copper. Alta Copper is a sponsor of my shows, and I want everybody to know that they pay a fee for me to do these shows, and it's to their benefit and also to the benefit of my audience, because sponsors are what help me to produce the content that I do. So I'm thankful on their behalf. Um, I'm very bullish on copper. One of the reasons that I am so bullish on copper is because there isn't a lot of great copper stories out there to talk about. What's happened in the last decade plus is that discoveries have dropped quite dramatically at a time when we need a lot more copper projects. And there's a very small group in the development stages, and we need a lot more of those. And so with copper doing what it's done lately to go up to $5, around $5 a pound, I think it's going to start bringing a lot more interest into the copper space. And when they do, there's a small menu to choose from. And Alta Copper just put out a preliminary economic assessment, and we have Giulio Bonifacio on to tell us about it. Giulio, thank you very much for your sponsorship and joining us today.
Thank you, Allan, as always, and thanks for taking the time to organize today's session. And if I could, would you like me to provide a bit of an overview on the results of the PEA?
Yeah, definitely. Well, you want to talk about copper a bit first?
Well, as I've said previously, I mean, my primary focus has always been looking at the copper complex and appreciating that there's a structural deficit in copper. And then if you layer in the EV thematic decarbonization and need for copper and data centers, the rebuilding of the power grid, the electric cars, it simply drives it to a certain level. I don't think that you see copper prices do what they did in 2013 to 18, where they started to drop. I think you're into a sustained period where copper trades at a certain level. One would argue that maybe it could come down from where it's currently sitting. We saw a bit of a correction last week, but that's to be expected. I personally look at this and here's a project that we have that's very advanced. It's not early stage. It's got nothing but upside by way of the drill bit. The economics match up so well compared to any in our peer group, albeit those companies in the peer group have valuations well above ours. Part of Alta was looking at it.
That's the situation, is that most of the projects that make it into your window of big and high grade are owned by much bigger companies, mostly majors. Not very many are owned by juniors.
Well, no, but I mean, if you look at, and that's one of the key points, when you look at the amount of production we can generate and the capital intensity, we're at the very low end of the curve. So, I'd press upon folks to look at our presentation material, from an NPV perspective, from copper equivalent production perspective, we're at the right end of the curve, more so than companies that have valuations that are 4 to 7 times ours, right? And so why is that? Well, it's probably because the story and the project sort of went on the back burner, was care and maintenance for an extended period of time. But since I've stepped in, we've been very active with it. We have clearly a very large shareholder in Fortescue, which most copper companies, developers, and I would opine that applies to, gosh, at least 98% of them, should never be built by the individual copper company. They don't have the balance sheet, they don't have the execution team. So putting forth a project that also produces an amount of copper that moves the needle. And when I say moves the needle, it's big enough. It's not, companies come out and say, hey, we're going to produce.
Moves the needle for a major.
Exactly. That's the key point. Projects that come out that produce 50 to 100 million pounds or 150, that's not enough. It's not big enough to have a real impact on those bigger companies, right? And so, we're located in Peru. That's come to the middle in a very positive way. The press clippings that come out from, Peru and the desire to streamline the regulatory process works in our favor. And I've always, I was an investor in the predecessor company for an extended period of time. I've always looked at Peru as one of the better locations in South America to be. Sure, it went through a couple of challenges here, but now you've got a government that's leading it, that understands that it's a big part of their GDP. So they really need to you know, rather than get in the way of capital investment, promote capital investment. And you've seen recent approvals. Synopsys approved Safranel, Tex Asset. And here we have a project that kind of fell off the radar, excuse me, but you know, this economic study is very advanced in terms of, hey, the capital numbers are very defendable. It's building on previous engineering studies. It's building on a previous pre-feasibility study. The
Because this
operating
was,
numbers, the
I've
A1
referred,
costs, C1 cost, sorry, all-in cost, excuse me, you know, at $1.96, very current. So you compare it to any of these other companies on the spectrum. And, you know, again, do look at our copper developer peer benchmarking slide just to get a sense of where we sit. I think that, you know, the valuation for us is, it's not even, you know, where it needs to be. And many of these other companies have valuations that are well above ours, yet their projects don't have the same size and magnitude. They don't have the scale. They don't have the ability to build at that level, you know, in terms of processing copper on that annual basis the way we can. And we show a 27-year mine life and an internal rate of return that's fantastic. Last comment, and then back to you for a question, Allan, is that every 25-cent increase in the price of copper on our model increases our NPV after tax by 425 million US after tax. There's also an opportunity on the tax. However, that's for a different group when they step in to look at how you can enhance, optimize the tax equation. For purposes of this study, it was more about, hey, what is it going to cost to take it to production? What are the C1 costs? What are the all-in sustaining costs? And what are our returns? And they're fantastic by any comparison. And so I think bridging the gap on valuation so that it's more commensurate with what it should be is something that will take place over the coming months. I have no doubt about that. We're gaining a lot of interest in this. There's a lot of folks, analysts, bankers, other strategic groups that have reached out to us on the back of these results. And so I'm very, very pleased with the impact that it's had to date, but it's a process like everything is.
I've referred to this as an optimized preliminary economic assessment because you use some pretty high profile engineering firms to help you with it, including Whittle Consulting, which are very good experts at optimizing a mine plan. And you want to tell us a little bit about why you use Whittle and what they came up with that is impressive?
Well, we use two groups. I mean, the first group, and it's very noteworthy, is Asenco
Right.
Engineering, and they are one of the more notable preeminent groups on the engineering side in South America. You know, working on Safranel, Tex Asset, Constanzias years prior, and so having their data, having real numbers that we could look at from a CapEx, OpEx perspective was very critical. Whittle Consulting. You know, they stepped into Lazul as an equity shareholder. I would add that, and I mentioned it, I think on one of the previous interviews we had, that they're also a big shareholder of Alta Copper. They wrote a check last year for about $500,000 at a then premium to market, worked out to be about 72 cents, which is around about where we're trading today. They did their work. They did their due diligence. They wanted to be part of this. They feel it's a tier one asset. It clearly is. And so you had Osenko lead the report, but Whittle Consulting steps in from a optimization perspective, sequencing, and that actually enhances the overall numbers. But that's what they do. They've been around for a long, long time. And you know, when I look at validation of a project, you know, what better groups to have than, you know, our big shareholder, $60 billion company called Fortescue, as well as Whittle Consulting. I think you'll also see other analyst coverage come out, but it'll be predicated on the
Hold
back
on a
of this.
sec, Julio, you're getting 3 steps ahead of me there. I need to get some questions in because when you're
Sorry.
explaining sequencing, what that basically does is it enables a project to be more strategically mined. And I think that's very important.
It is without a doubt. It further enhances the overall profile. And so many projects and companies will go through this process typically during feasibility, but I think in our instance, because most of the resources already measured indicated it was well worth our while to consider that as a further opportunity to enhance what are already very good economics.
And speaking of the economics, this report, this PEA was done using a 346, I think the number was, copper price?
Sorry, excuse me. No, we used a 3-year trailer, so that was a $4 copper price. We used a gold price as well as silver price. So we used 1850 gold and 23 silver. But we do show sensitivities below $4 copper. But we ran our base case at $4 copper. But if you look at the presentation material, you can see that even at 385 copper, it gives rise to a $2 billion US after tax NPV and a 22.5% IRR. So, and a very good robust payback of 3.2 years. So we ran the numbers at different levels, but let's be very frank and direct on this comment. I think copper at $4 to $5 is likely the sweet spot. Some prognosis suggests it goes a lot higher than that. That will be of great benefit to ourselves and other copper developers as well. But when I look at our valuation at close to 70 million market cap, and I compare it and I look at our numbers and realize that, and you alluded to this earlier, it is a project that can be brought on in a shorter timeline because of the wealth of data that we already have in front of us. And that to me was a key ingredient in terms of my own personal investment, if you will. And then looking at how you advance projects and deal with permitting and community. Well, I've got a wealth of experience in that area. And I think that's also an area that we've enhanced with adding of certain individuals, as well as taking a slightly different approach about how we go about that.
I'm not an accountant. I don't play one on TV either. And sometimes this NPV calculation is something that Robert Friedland is not too fond of, because you're trying to predict the future and roll it back to the current. And that's challenging. What I look at instead is the all-in sustaining costs, and then try to compare that to where I would see copper prices in the future. And when I look at your all-in sustaining costs, using that $4 number, it leads me to be very bullish about the future of this project, because I do believe that copper is going to be, it needs to go a lot higher to incentivize more mines, and we drastically need more mines. So, I think there's a lot of wiggle room between your all-in sustaining cost in this preliminary economic assessment and what I think is the future price of copper.
Well, if I could, I am an accountant, but been in mining for plus, gosh, 30 years now. I'd actually agree with that comment that Friedland's put forth. I mean, of course, the notional references are always going to be NPV, PNAV discounts, internal rate of returns. But further to your point, if you look at how we prepared our capital costs, initial and sustaining, we didn't back end it at all. We put it all in the front end. Here's the key point. At $4 copper, and you could look at a lower copper price, but at $4 copper, the after-tax life of mine free cash flow, this is after paying everything, including payback on your CapEx, both initial and sustaining, comes in at $8.3 billion. At $5 copper, 13 billion. So what I would look at, and as companies look at this, including the bigger majors, when they look at it, they'll look at it from an EBITDA perspective. So what's your after-tax EBITDA? What's the multiple on that? That's what you should be looking at. So I don't, again, I want to be very clear with the audience. I appreciate that comment completely. Being, that I am a CPA, I get it. The fact that you got payback in a relatively short timeline, depending on what copper price you use, of course, and free yearly cash flow after tax, that's what should drive the investment decision. The other side of it is, it sits on a 27-year mine life, which matches up nicely to companies that carry valuations of 300 million to 3 billion. Our valuation's 70 billion, right? So, is there an ability to move that forward? Of course there is. Now, one last comment, and then I'm going to back to you, Allan, if I could.
That's another thing that stands out for peers in your group relative to the assets. The valuation is very modest compared to your peers.
I mean, that's also in part the opportunity for any current investor and future investor, that there's a real ability here to leverage this up in a very significant way. And this, unlike many of the others, has a very notable large entity behind it that may or may not move forward on this. I mean, there's never going to be a guarantee on that, but do I think that that's a distinct possibility? By all means. Do I talk to other significant players in the space? Of course. You also have a project that you could build with a lower capex and grow it to this size, but I don't think that that's the appropriate way of doing it, because if you're going to be dealing with a major, and again, this is a project that has enough production to move the needle. 88% of it is copper, 12% is precious metals. So that's an offset. It's also not a dilution exercise, because I don't have to spend all that money to get it to this stage. But there's enough size and magnitude and scale to this that whoever steps into it can build it in a certain way. They get to determine that. I personally think that because our capital intensity is so low and we can operate with one SAG mill, two ball mills, most projects of this size and magnitude on a daily throughput perspective typically need two SAG mills, four ball mills. We don't.
That's a
So
lot of energy.
infrastructure, the ability to build at scale and size, that sets us apart. Now, last comment, every single one of the copper developers that are in our space, and many of them, and some of them you follow, still have to go through the same process from a community, regulatory, permitting perspective. It's no different. So, you know, the sound bites you get back on why you shouldn't, it's very flawed. I mean, if we know, you know, firsthand, the existing mines minister, the former mine minister is on our board. We have a notable large group behind us with two directors on our board, one being a mine builder that, you know, is very much apprised of where we're at with the project. That helps us. But more importantly, you know, how do you continue to execute on a project like this? And, you know, turning the page on a project that it was on care and maintenance for a number of years. That was in great part due to the fact that capital markets were not there for copper companies. Well, that's changed, right? And so, you know, getting on the radar.
That has a lot to do with why that over the last decade plus, that the discovery curve has dropped off a cliff, is because during that period, it was difficult to explore and fund projects into the development stage. And that's why the cupboard is bare today.
Well, I mean, that is such a key point, because I think if you look at the context of the capital market since about, and you could argue what the start time was, 2014, 2015 until even now, very challenging. So you're not seeing the level of discoveries. You're not seeing existing development projects advance appropriately to feed what is coming. And so then when you look at projects that can actually be brought online into construction ready stage, you know, before 2030, there's very few of them, right? So that makes it even that much more interesting. But yeah, I think as the context of the markets change, as the generalist investor steps in a bigger way, and they've been, you know, vacant for such a long time here, that's going to drive more capital for companies like this, but also other exploration companies, development companies, without a doubt. You need capital. I think that at the very least, we've demonstrated that we bring capital in a smart way, premium to market, no warrants, not at a discount. I think as we get on the radar of certain larger groups, that potentially changes. But valuation for me, for any investor, and speaking as a pretty large investor myself, that speaks volumes. It's about, you know, what is the resulting valuation? How do we stack up to the peers? And how do we start getting the re-rate by way of market awareness? I wasn't really in a position to start that until now. Now I've got a study that's very advanced, very defendable. I can start having those discussions. So it is a process that one goes through to, you know, bolster the investors that you have, enhance, bring on new investors. And I think you'll see that the valuation does change over a period of time because of that very point.
You mentioned a couple times defendable. What I think, I don't want to put words in Julio's mouth, but not all preliminary economic assessments are created equal. There's ways you can dress these up to look better than they are on how you the formula you use for your preliminary economic assessment. And what Julio is talking about as defendable, what I think he's talking about is that they haven't played any of those kind of PEA games, that you're looking at this in a realistic fashion and presenting it a way that major mining companies would look at it. They're going to poke you don't want them poking holes in your preliminary economic assessment. Did I get that right, Julio?
No, exactly. I think also the ability to build off of previous advanced studies, including that pre-feasibility study, helps us a lot. And it's not early stage in that when I say defendable, it's not like we were trying to take any shortcuts on the capital cost, sustaining. Even when you look at C1 costs and all-in costs, you'll see that in certain cases, it seems higher than certain of our peers that we benchmarked against. But bear in mind, this is a very current study, right? And some of them are outdated, and some of them typically, if you look at one or two slides in our presentation material, many companies focus on initial capital, the headline number. And what they do is they push off some of the capital to sustaining, or in some cases, it's an open pit followed by an underground, or an underground followed by an open pit. So if you actually look at the all-in number, which influences the EBITDA, life of mine, free cash flow after tax, if you look at it from that standpoint, you'd appreciate that we're at the very right end of the margin, right? We're far left on the capital intensity because our number is so low relative to that cash flow. That's another indication that one could look at. Like if you look at capital intensity over copper equivalent production, over NPV, that's one great way of measuring it. So that's what we've done. Is it's been very much more, hey, I don't want early factoring. I don't want to be aggressive and push you to a 1.6 billion CapEx if it's not. I want the number that's supported. And we've also got in that, and then I'll close off on this comment anyway. There's also a 20% contingency built in, right? So it's a good number to start with, and then it's also got a 20% contingency. So there's plenty of room within it. Now, I was asked, could that change? Of course, everything can change. The levels change at certain points in time, but it's a very accurate study, more current than what you typically see in terms of numbers, and more advanced than what you would normally see with most preliminary economic assessments. And I'm not being critical of the peer group.
The last couple of years of inflation.
I'm sorry?
It takes into consideration the last couple of years of inflation.
It has to, I mean, by its very measure of,
But if
if
you
you looked at this
compare
project
that,
10 years ago, the numbers would be different, right?
if you compare that to someone who did a study 2 years ago, it probably is outdated and needs updating, and you've got the updated one now.
Yeah, I think the other thing too, when I say advanced, also the resource, like many preliminary economic assessments are based on an inferred resource because they haven't done the infill drilling. And so that's why a number of companies will have to continue on to do the infill drilling to convert to measured indicated. Well, if you look at our resource, almost 80% plus of it is measured indicated. So because of that, much of that will become proven and probable if you moved it to a feasibility study. The other thing too is I don't have to wait. When I say we as a group don't have to wait to move it to feasibility. We could move it to feasibility on the back of the existing resource, which is a very key point, right? And so you're building upon all those different data points, but that's arguably why I can say, rather comfortably that, we're very, very pleased with the numbers. But, when I say defendable, it's more about, of course, we're going to have discussions with various groups. They will do a deeper dive. And when they do the deeper dive,
Poking holes in everything.
of course, if I could add, we processed at 120,000 tonnes per day. They may come away with, hey, we like that number, but we think it should be more like 100,000 tonnes a day. You know what I mean? But the magnitude of the project, the configuration will not change. What may change is the mill feed, right? If you have success with the secondary deposit and the third deposit. We also have in Norte, for anyone that looks at the sections that are on our presentation material, you can see that it bottomed in mineralization in many areas, and the grades got better. So in most circumstances in today's world anyway, you will chase that opportunity. If you bottom the mineralization, you continue on. So, there's a lot of low-hanging fruit by way of the drill bit that we want to, point to, because at a 27-year mine life, anything we add to it, puts us into a completely different category. Like at 27 years, and do spend time, if I could get your folks that are on this program, go to our presentation material. You'll see that at 27 years, that's a pretty long mine life. We stand in a very good position there. Do we think we can add it? And I know I've said this to you before in previous interviews, but 85,000 meters, you compare that to many porphyry systems and companies out there, they've drilled like 2, 3, 4 times the amount.
Yeah, exactly.
So yeah, I'm pretty excited about that as well.
You brought up a really good point. I got 2 more points I want to ask you about before we close.
And I won't interrupt you this time.
Okay. One of them is that you've got Canariaco Norte, and not very far, you've got Canariaco Sur. But in between, there really hasn't been a lot of drilling in between. So I like the potential below, but I'm also interested in, is there a possibility to connect those two and make one big pit?
Well, we think Norte in itself has got a lot of upside at depth and laterally, but we think if we're looking at connecting two, it would be Sur and Verde, more just the signatures are more aligned.
Okay.
I
And
mean, of course,
Verde doesn't have.
I mean, it has had no drilling, but it's got all the, if you look at the soil geochemistry, it's got all the right attributes, and it's very consistent with what we see at Sur. And Sur hasn't had much
And
drilling
those
before.
attributes, they're not just pie in the sky, because Joey Freeze knows what she's doing when it comes to drilling. I mean, she efficiently drilled Canariaco Norte and Canariaco Sur, as you indicated, only 85,000 meters to get here. A lot of companies might be at 500,000 by now. So she's a pretty sharp lady when it comes.
Well, I mean, I think, and I'm glad you raised that because it's a very important point. It's also one of the reasons that drew me to Alta Copper was, I mean, if you look at Joanne's background, the wealth of experience in Peru, she lived there for a number of years as well. She was also on the discovery team of Arequipa, right? And I don't think she gets credit for that, and she should. I mean, again, as they say, when there's success, everyone joins the
Well,
parade.
Joey kind of downplays. She said, well, I was only the QP. Yeah, Joey, I know what a QP does. If everything has to go through her, because that she's got to sign off on everything.
Well, exactly, and she was part of it with Freddie Wonky,
Yeah,
and they named Purina after Freddie Wonky's daughter that people don't know.
yeah.
Freddie Wonky was part of the scoping out Caniarco, right? And so when you look at the success that Joanne's had with Norte and Sur, I mean, I think that speaks volumes, right? And so at the end of the day, as they say, it takes a team. We have complementary skill sets. I've known her for a long time. Fantastic skill set, without a doubt. And then, as we move it forward with her skill set, my skill set, Sean Waller's skill set, I think, alone, if you added the three of us together in terms of years of experience, I'd hate to guess what that total number is, but high. And then you look at our
Over
board of
100
directors.
years.
Yeah, definitely. Definitely. As you can see with my gray hair. But yeah.
Mine too. The final thing I wanted to ask you about is, you mentioned a couple times about, okay, so you've got a company in Fortescue as a big shareholder. Now, I want to lay this out there for my audience to understand something. When you're talking about a project like this is something that a major mining company would need to develop. If a company is just focused on copper, well, they will look at a project like this in a different way. They've got these big mines. How would it schedule in? That sort of analysis. But in the case of Fortescue, they don't have a lot of copper production, and they want that copper production. Same thing with Barrick. Barrick is a gold company that wants more copper. So when these big companies are looking at something like this is sort of an entryway into the copper that could be quite interesting to a lot of majors. And so I don't just think it's something that Fortescue, any major mining company that wants to increase their exposure to copper mining, and if they don't have it right now, this would be a very attractive asset.
Well, I mean, I think the reality is that they've been very vocal about their desire to move into copper and critical metals. They've created a separate division to that effect. They've added Andrew Hamilton to our board for a reason, I think. Again, I can't assume for any other reason than for them to pay close attention to the developments, and
Well,
they
and the
seem
guy is
relatively.
one of their best mine builders.
Yeah, very much so. But I think any mining company, you look at even Barrick and how vocal they've been about the copper space and moving into that metal. If you listen to the results when Bristow was on, he spoke very much about copper. You look at what's going on with Anglo. At the end of the day, it is really about, how do you feed that supply deficit, and you're going to have to do that. And then, more importantly, are you really going to look at a project that is earlier stage that's 15 to 20 years away? You're probably not. Fortescue, you know, they've been very supportive. There's further funding I can get from them, I believe. They've been very vocal about that. We'll see what that looks like. I just think that from my perspective, more as a shareholder investor, I just think that we're so below the valuation curve that I can bridge that gap. Now, whether I get to, you know, one of your measures that people look at is your PNAV discount on a project like this. Well, many companies are 0.2 to 0.3. We're well below 1. Like now, I don't even have to get it to 0.3 because your PNAV discount's predicated on your NPV. And again, how you value these things, NPV, life of mine, after tax cash flow. There's a lot of different ways of doing it. But even if I get to 0.2 of my NPV at $4 copper, that speaks to a valuation that is, you know, 8 to 9 times where we're at. Now, again, I'm not saying I get there. I'm just saying that I know I can bridge the gap because our valuation isn't yet there. And part of that gets back to market awareness. And so, you know, doing these type of interviews, Allan, I know we sponsor you, but you've done a fantastic job over the years. We've known each other for a very long time. This is part and parcel, you know, getting out there. But now I've got substantive numbers I can look at, but also a catalyst that I pointed to. And did it take us a bit longer to get there? Yes, but that was by design. It was about getting an advanced study that we were really comfortable with, and you know, doing the work that we needed to do to put forth something that was very commensurate with what we had. And so, to me, that is and is this year in 2024 a major catalyst. It will drive certain other discussions. You'll see other developments take place without a doubt. And you'll also see potential other opportunities that arise from that will be very, very clear to the market that, hey, gosh, darn it, you know, the valuation on Alta Copper should be, you know, I hate to make predictions, should be significantly higher than where we're at today. Like I just, you know, I always get to that ultimate conclusion.
It's always hard to sort of put a value on where you could go. And so the way I look at it is, I look at $5 copper, and if we start seeing it significantly above $5 copper, that means that all of these majors have to start acting sooner than later. And if they are going to act sooner than later, I watch the cupboard of projects in the development stage, and that cupboard is pretty bare.
Mhm.
And so you get to a price where they almost have to act. And if they have to act, the cupboard's bare for them to go look for food.
Well, I
So,
mean, but that's exactly it. And then, you know, I was asked, well, why has there not been as much activity in this last cycle? Well, if you really looked at it closely, before the global financial crisis in 2008, there was a lot of activity, a lot of acquisitions. After the global financial crisis till about 2013, in around that range, a
yep.
lot of activity. Copper prices started to decline. Now you could argue was it 13 or 14, but they started to come down. Activity lessened. We haven't seen a whole lot since then, but now that is going to change yet again because I think there's more folks currently convinced because, you know, it's been volatile in terms of what copper prices have been doing. But now we're at a period of time where we're definitely in a secular bull for copper. Now you could argue, is it $4 copper, $5 copper, even higher? For me, that doesn't really matter. The reality is the cupboard, to use your term, has to be filled. And projects like this will be of great attention, will draw great attention for certain groups, right? Because there's not many of them out there, right? And you'll see more activity because, you know, simply look at what's gone on with the recent press clippings on Anglo. You know, look at the discussion from traditionally non-copper companies like a Barrick that speak about copper in a very
That's what
significant
they're
way.
after at Anglo.
Even Fortescue is an iron ore company of bulk mining, you know, one of the most successful companies that's been built in the last cycle. They started in 2020, 2002, 2003, and are a 55 to $60 billion company. They fully appreciate that we're not just going to rely on iron ore. We need to focus in on critical metals because that's the wave of the future. And that's also something that, you know, society as a whole should pay attention to. Now, it's not just the structural deficit in copper, but it's also the EV thematic, right? Going green,
Well,
the data centers. You look at data centers from an AI perspective. Well, what do you think that takes? Right?
wow. The difference between doing a Google search and an AI search, it's like 10x the amount of energy you need. And our power grid is already very strained. But you brought something up I wanted to say that actions speak a lot louder than words. And there's a lot of words about how major mining companies want to get into copper. But the actions are what is speaking volumes to me. Like you brought up with Anglo, what is BHP trying to acquire? They're trying to acquire the copper assets. Everything is about copper with these major mining companies these days. And I go back and I think a lot of that has to do with that window where you guys were on care and maintenance. You weren't the only ones. If anybody wants to do a Google search on the discovery curve of copper, what goes into that curve is how much exploration you're doing. And if that curve is falling off a cliff, that means there's nothing going into the development stage. It's not complicated, folks. The words, the actions are speaking louder than words. There was a prolonged period of not enough investment in exploration to find discoveries that could then move into the development stage. And now that we've got this problem, every major mining company is talking about copper.
And that will, I think that will continue, because I mean, I think at the end of the day, the bigger mining companies have a stream of copper production because the margins are so good, right? I mean, even if you look at, as I alluded to earlier, the amount of copper we produce, the gold and silver, but the after-tax life of mine cash flow, very few projects can get to those multi-billion dollar thresholds, right? And that's arguably how they get valued at the end of the day. It's a multiple of EBITDA, right? It is an NPV, by the way. I agree with that. Again, to reiterate the point, but that's a measure we all look at. We look at payback. To me is also very critical as a measure,
Yes.
without a doubt.
Because that tells you how what the free cash flow looks
And
like.
the other thing
You're
too is,
able in 2 years to pay off 2 billion. What happens in the third and fourth year?
and also, yeah, because you're discounting time value of money and things like that. But the internal rate of return, I think, is also a key measure because of a cash flow model, the way it's generated. If you're dealing with, in this case, close to 2.2 billion in initial capex, anytime your IRR is above 20%, that is in itself very, very notable. So, if I look at my peer group, we're at one of the highest ends on our IRR. I mean, it's pretty significant. We're 24%. We're higher than almost everyone other than Los Andes. And they've got a higher capex threshold. So that IRR is also a measure, but I actually, my default has always been EBITDA and life of mine cash flow, to be clear. But there's just too many things you can look at, capital intensity. I mean, the list goes on and on. So
I get the sense because when I hand the mic over to you, Julio, you have so many things to talk about. And that just goes to the metrics. He's basically what Julio's doing is no matter how you look at this, it comes up looking really good. And that's why he has so much to talk about.
and I apologize for that, but yeah,
Oh, no, Julio, no.
it's hard to contain it because there's
You're living
so
this.
much, there's so much here, in terms of the economics, the advanced nature of the study, the big shareholder, the expansion opportunities. And, when I look at it, and bearing in mind, my previous 2 copper companies did extremely well for myself and others. And ultimately I'm a big shareholder of Alta Copper, and you can see by way of recent trading that I have added to my position. Once the results went out, you'll likely see me continue with that. But, at the end of the day, I just think that the ability to move a project like this forward, taking advantage of the fantastic work that Joanne Fries and Sean Waller did historically, I benefit from. They're still involved. So we have a fantastic working relationship. We all have complementary skill sets. So it's worked out very, very well. And I got to say, I'm pretty pleased by it. And, I'm a numbers guy at the end of the day, and I know mining a lot, been around it all my life from every aspect of it, exploration, development, construction, permitting. And I do the comps, I do the benchmarking. And I'm like, I knew this was going to come. I didn't, in all fairness, think the numbers would be as good as they were. I was very pleased by that, but I was also very pleased that we didn't, to reiterate a point, we didn't take any shortcuts on it, right? And that's important. Very, very.
Well, Julio, you passed one of my tests, and one of my tests is that when somebody has a really good project, they got a lot to talk about. So don't ever think you have to come on my show and not talk about it, because I can feel your enthusiasm, and that's based on a whole bunch of data that has you really confident about where the company is going. So I really appreciate that, and I hope my audience recognizes that these aren't made up numbers Julio's throwing out there. These are based on hard data from a lot of work and by serious engineering firms. So thanks a lot, Julio. I need to close it off here.
Allan, as always, thank you very, very much, and really appreciate the time today that we spent discussing Alta Copper.
Well, as I said at the start, I'm very bullish on copper, and I've been following it for 30 years. I've seen the damage that's had in the supply chain. You look at something like a Cobre Panama, maybe 1% of the world's copper goes offline, and the price of copper goes from $3.50 to $5. And that's just telling you how tight the supply chain is. And then you just look at everything that's going on there with data centers, with the cloud computing, with artificial intelligence, with alternative energy sources, automobiles going to electric. All of this needs copper, and then you've got a very old power grid that can't support this. And so you need to rewire your power grid as well. And so you've got all of these inputs of demand going forward. But then you look at the supply chain. For many years, over a decade, there's been the curve of discoveries has gone down, 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 down consistently. And it's at like nothing right now. And then you look at what's in the development stages. If that discovery curve goes down, then you don't have enough projects going into the development stages. And all of this is happening when you've got these demand coming that I'm talking about. What this is basically setting up is a supply crunch. And it's inevitable. And I'm not just saying that because I'm a bull on copper. Do your own homework. Check out all the demand that's coming from copper. Check out the power grid. Check out developing countries that need more copper. Everywhere you go, it points towards more demand. And then do your homework on the supply chain. Look at the discoveries that have been out there. In their preliminary economic assessment, they do an assessment of peers. If you did that on other metals, you would have like 40 peers. The fact that they only have about 15 peers is indicative of the problem with projects in development. There's just not enough of them. And so Alta Copper, I keep on pointing out to people that Alta Copper has what major mining companies need. And I'm going to leave it on that. Do your homework. Speak with your financial advisors before making any investment decisions. Have a great day, and we'll talk to you soon.